Hey everybody, welcome to the Multifamily Legacy Podcast. I'm your host, Corey Peterson. Today, we do have another, and I mean another podcast guest that is absolutely going to it's like she's got her water cannon or her freaking double barrel shotgun, and she's going to unload, and it's great stuff. Oh my gosh, this is such a awesome podcast that we did, and we're going to talk about like how the investment money game really works. So our next guest is Karen, and I'm going to probably say her last name wrong because I didn't ask her exactly how she said it before we started the recording of the podcast, but Oeser, and I know that I probably just killed it. Karen, if you're listening right now, I give you mass apologies. But what's cool about her is she has been doing portfolio management for over 25 years. And I'm talking not just like, I'm talking multi-million-dollar Vanguard, like big, huge capital funds. She's been in this business and she's been managing fixed assets. So she came from corporate high-level asset management. She has a CFA, a certified financial analyst. It is a high certificate for what she does. And it is really, she comes with a lot of knowledge about how money works in the asset management game. Now, we're not talking about asset managing as it relates to apartments. We're talking the money game. She understands the money game like at a very, very high level. So you're not going to want to miss this episode. It's going to be packed full of nuggets and goodies. And my friends, you're going to like the ride. Okay. Before we do that, though, a couple things. Podcast reviews. Oh my God. Would you believe we have 744 written reviews? You guys are out there smashing it. Absolutely crushing it. Oh my gosh. So the first one comes from Peyton Hattie, 5-part series. Enjoying the basics a lot. Thank you so much. I've enjoyed doing that 5-series basics because it really is the fundamentals. Miranda Willa says, boss. Corey is a boss. That's right, damn it. I've been trying to get that out for a long time. Someone finally said it. And then Esme Sydney says, check it out. I love the show because the host gives many useful tips for investing in real estate, and he does it in a way that is missing on other shows. And that's a fact, my friends, because you will not get all the unfiltered goodness, greatness, and the crap. Like we talk about the dirt in this podcast. It's not all sunsets and palm trees, by the way, kids. Sometimes we get a little bruises and scrapes and we get we hurt our knees, and gosh damn it, that's life. That's what we do here. We make this podcast so you won't fall asleep and you'll still get excited about doing it and doing it well each and every day in the multifamily space. And really, that is my gift to you. My goal, my hope, is that I leave enough crumbs that you can see the trail and you can take it, my friend, and blaze your path and find your way forward in this wonderful game called apartments, right? Now, with that said, I really want to listen. With that said, this game is amazing. You should be playing it at a very high level. You can do it. I believe in you. You have it in you. I'm telling you right now, you have to believe it, right? Before we get started with Karen, a word from our sponsors.
Do you want to learn how to find and finance apartment complexes using other people's money? Join us for our virtual Apartments to Millions Summit, where we will teach you how to get started in multifamily real estate investing. We will show you underwriting, how to find the best properties, how to find money, deal structure, and even how to maintain the properties and deal with the unexpected expenses that pop up. Text A2M to 480-500-1127. That's the number 2M to 480-500-1127. Learn how to create cash flow and not quick profits. Cash flow is king.
All right, there you have it. Listen, A2M Live, where it's at, you need to be getting and going to our Apartments to Millions Summit venue. It is awesome. Really quickly, the easiest way to do it is text A2M to 480 500-1127 and start your journey. Get in with some of our amazing speakers. We have set the stage, my friends. It is ready for you. So with all that said, sorry for the long introduction and going into it, but we have a great speaker and you are going to really love this show. Karen, welcome to the show.
Thanks for having me.
Man, I'm super excited about this episode and just really having you share some knowledge. We were talking before we started of just kind of your passion, and we're going to get to that at the end, of financial literacy, and especially for women, and you've got some cool things going on. But more importantly is, I think, your story, and I would just love for you to share the story of where you started and where you're at, because it's really very unique, and I think a lot of people are going to resonate with it.
Okay, excellent. Well, I was born in Pendleton, Oregon. I was in the traditional investment world for almost 25 years. I managed multi-million-dollar portfolios. I worked on the buy side and the sell side. I was, an old-fashioned stockbroker for a while, and then I managed some assets with Wellington Management Company, and they're one of the largest mutual fund companies in the world. In fact, you may be familiar with the Vanguard funds. We managed a lot of their money.
I know the Vanguard funds well.
Yeah. And so that's where I really cut my teeth into the asset management side of the business, and asset management as we know in the investment business, which I've been corrected many times when I called myself an asset manager in the past, because it means a different thing in the multifamily world.
Well, so it's funny because I was reading your bio when we first started, and I was like, that's where I went with it. I was like, oh, asset management. But you're talking about different asset management. This is true. Well, like the financial world version of that is, you've worked for very large companies with lots of money.
Yeah.
And you spent 25 years doing that. That's a different perspective than I think. But you still chose to leave that world. You would think there's some golden handcuffs there.
Oh my goodness, yes. No, I've kind of betrayed my brethren, to be honest. I'm a CFA, which is a Chartered Financial Analyst, which is the highest designation in the investment management business. And so I continue to sit on the local board. And one of the things that I'm really trying to, we actually didn't talk about this much earlier, but I did want to talk about a little bit with your listeners, is one of the areas is alternative investments. Because one of the things you hear often in the multifamily world is that it's very myopic, and it's like all about multifamily, and that's the only way that you can invest. And that's actually not true. It is an amazing asset, and it's one of the very important asset classes. So I'm actually working with some financial advisors right now, because I said, there's a place for all of us in this world, and I speak your language. So I've got the street cred with investment management folks to talk, and let me take care of this alternative investment slice of your pie, because it's getting bigger and bigger. So just a little bit more specific about where I manage in the traditional investment world. I manage the fixed income assets, and so with that, you're trying to get a return, coupon clipping. Well, you look at what happened in the last 5 years is you're basically paying the bank or the treasury money at this point. You've got some negative yields. And so you're getting 1% as an investment manager, and then you're trying to get a return on top of that. Sometimes you put them in mutual funds, which also have a fee to that, and they're at 4% before they're even trying to make any money. And so you're trying to justify what you're doing for them. And so the last 3 years that I was in it, I was really looking for some alternative means. Annuities are a very popular way to get a little bit more return, which they really lock you up. And on the multifamily side, one of the liquidity isn't as high. But if you're going into annuity, we're talking 4, 7, 10 years sometimes that it's locked up. So
you lose your control to pivot and maneuver, right?
Yeah, exactly. So there goes the liquidity argument. And so I was looking at those, and it was still a very narrow offering, and there were huge fees to get out of it. And importantly, and I would talk to a lot of different managers about looking outside of that universe, and I just wasn't getting anywhere. So that's why I decided, to really serve my clients well, I really need to get something that can get a higher return. And let's be honest, the Treasury they call it the risk-free rate of return. So when you're looking at returns, that's what you look at to figure out what your risk capital is. And so it's always been the 10-year treasury. Well, look at what it's been doing. It gyrates all over the place. And you call that risk-free.
Yeah, that's not steady anymore.
By the way, you're getting less than 1% on that gyrating non-risky asset at this point. So it completely has shifted. And then you look at the demographic shift that we have with the baby boomers, and they're trying to make all this money with their assets. And also, that was one aspect why I left, because I just wanted to find something that had a better kind of return on it. And then also on the risk side. So you're looking at traditional income, it gyrates all over the place. So that's on the treasury side. So the other place in the traditional investments is you're looking at corporate bonds. Well, corporate bonds are all over the place too. And they could tank at any time because right now they're borrowing free money, and so they're leveraged up the wazoo.
And everything's indexed, priced over. Like, there is no fundamental investing going on right now that makes sense, like, to anything. And so I love what we're talking about right now. So I don't normally talk about stuff like this on this podcast, but that's my background too. I used to be a financial advisor.
Really? Oh, okay.
Yeah. I used to be, well, listen, not at your level, okay? I was just an Edward Jones financial advisor, okay? But I still understand the money game, and what we're talking about for people that are listening that you may not, if this seems too over your head, to me, we're having a great conversation here, is understanding the options that people that are in the market, stocks, bonds, mutual funds, what they normally invest in, and what these funds do too, and where there's their opportunity. That's what we're really talking about. And the truth is, there's not really a lot of good places to generate steady income without the craziness. And that's because as investors, that usually when we're talking about, and you said the debt side, the bonds are like that fixed income side, meaning we just want nice steady, dude. That's what people look for. And that's usually the biggest chunks of money that are out there. When people place money to invest in the market, if you give them an option of mutual funds or these high Corvette risky things, or just fixed income, they tend to want to put most of it in fixed income.
Yeah, exactly. And it used to be as soon as you hit 60, right? Well, we're living into 90, 100 now. That doesn't carry you very far.
Yeah.
So there we're talking about the risk level, and the gyrations, and then you're looking at the return itself. So we're talking about basically a negative return. You go into your bank with your CDs. Yep. So let's say you're a really, really conservative investor. You're going into a bank getting 0.1% return. So you've got there. And then you got it gyrating at that. And then, let's talk a little bit about safety in and of itself. So you're coming into the multifamily and you know what you're buying. It's an asset. It's a physical asset. And that is one of the things that, let's call it for what it is. In the stock market, it's a lot of funny money. It's a monopoly game with some unknown asset behind it. Yeah, you have companies behind it, but you can play with the money and all of that. But when you're talking about multifamily, they literally can go drive by what they're buying and they can say, yes, it indeed has 50 gold doors on it or whatever it is. Yes, you tell me, is this really a class A? Is this really the top of the line? Or is it a class C? I can drive by. You can't get away with lying.
Exactly.
Pictures don't lie, right?
Yeah. Well, can we use GameStop as an analogy?
Oh, yeah, exactly.
So GameStop, like that thing, if you had your money in that, for no reason, like everybody was shorting it, then the market came in and they said Reddit and some other places, and so the street people, just normal people, make that thing raise, and now it's dumping again, right? Last time I checked. There's no rhyme or reason for that. It's not based on any fundamentals of
none whatsoever.
Stuff.
Fundamentals exited stage left a long time ago in the stock market.
And listen, most people, when they're in that retirement phase of their life, they are done playing games. They just want a safe place to end some, like you said, Karen, the biggest challenge is outliving the money. That is the biggest fear, right?
Right, exactly.
And so when it comes down to it, multifamily is starting to make at least a good plan for that money, or at least a portion of that money as an alternative. Am I right? Is that what?
Yeah, and it's a good alternative for it. And again, it's more stable. And so you're looking at the fixed income investors. So let's now think a little bit about on the stock side of it. So you've got the fixed income investors that just coupon clipping.
Yep.
Well, then you're looking at if you're risk accepting, you're willing to take a little bit more risk. Let's move to that side of the portfolio. Well, hello, multifamily has that too. You can get your income and capital appreciation. Because usually it's in the stock market, it's one or the other. When you're playing the market, it's one or the other, but you can actually play in this sandbox and have both.
Touche. And that is dropping the mic right there.
Boom! Right there. Why did you leave traditional investing? Right there. You can get both sides of the equation.
I love how you're setting this up, because that is the cat's meow, right? Because this is the street. This is everyday Americans. This is what we're sold as we go, as we're creating our jobs, our 401ks. I mean, there's trillions of money doing this, and they have no idea that there's anything else than fixed income or equity. That's the only two buckets they know. They don't even know they could have both.
Exactly. And one other important point is low interest rates work for you in multifamily. It's actually your friend, because that return goes directly into your pockets, right? You get to borrow at a lower rate, and that goes straight to the bottom line.
I love how excited we're getting.
Traditional market is killing you, and you come right in here, and it's actually working for you. It's a good thing.
So listen, you're knocking it out of the park right now, because I feel like this is the mantra.
You didn't pay me for this either, folks.
Yeah. Because now because we got to step back for just a minute and think about Karen here. Karen has 25 years of experience in this game, and she's played it at a very high level. And and you're coming to this conclusion of, I've been in the game a long time, but here's where I see opportunity. So let's talk about the actual opportunity in apartments, and really, I guess, how do you get your people, these people out there, how do you get them to see the value of apartments, I guess? Like, what's the story to get them from the stock market into apartments?
Well, it's really interesting. And as you know, most people leapfrog from the single family. Let's stop there for a second. Almost anybody understands flipping a house. They understand collecting rent. And most people are like, no way, I want no part of that, because I know somebody who owns 5 houses and they're worrying about broken toilets. They're worried about this, that, and the other thing. So I don't want to be involved in real estate. That's what most people know about real estate.
That's their first opinion. I agree. 1,000%.
Exactly. They're like, no, thank you. Who wants to be a landlord?
Toilets and tenants. I'm out.
Exactly. So they're like, okay, I'm stuck with that. So then you go into multifamily. Well, let's talk about that risk that we talked about earlier. So let's say you own 5 houses, you own 5 single houses, 5 doors there, and one person doesn't pay rent. That's a 20% loss on your income. And then chasing it down and knocking on the door. And if the tenant leaves last minute or trashes it, you lose all that time on that one door. 20% of your portfolio with one door.
And I may not even be equipped, right?
Exactly. And if you only own 5 houses, you're not going to be paying a property management company, because the money doesn't pan out at that point.
Right.
But let's multiply by that 10 and make that 50 doors. That's only a 2% loss with that one.
50%. Now we're starting to make a little bit more sense, right? Now at $50, though, we could probably afford a management company, maybe.
Exactly. 70 is the number, but at 50, you can start moving there and thinking about at least having part-time property management. So there's a passive and active side. There's 2 pieces of it. That's depending on which side you want to be on it. There's money to be had on both sides of it. So when you're looking at investors, you're talking to your traditional investors. So let's talk passive for a little while.
Yep.
So on the passive side, you come in. You don't have to worry about a single toilet. You don't have to worry about the late night calls. You don't have to worry about the trash collector or collecting insurance. All you literally do is hand you a check on day one and then just bring all your money in on a very nice return.
Yep.
And then for the most part, it's very popular, as you know, right now to have a few classes, but let's just keep it simple for this conversation, is then the holding period is usually about 5 to 7 years.
Yep.
Less than most annuities. And then you're getting really nice returns. So, they have, as we know, the preferred return is what the investors get.
Yep.
And so most of them are in the 8-ish range, 8 to 10-ish range, in the preferred return. Well, go back to grandma, who is getting 1% at most on her treasury that's like this. So she panics when she listens to the nightly news to see whatever political party pissed somebody off that day.
Yep.
And then she worries and panics. But guess what? She just knows that check keeps coming in. And also the good thing about it, so even let's say there's turnover, you have 50 doors, you're going to have turnover, but that's what you have reserves for, it's planned for, and you can handle it. It can absorb it. So the risk is so small in the multifamily. So you don't have the gyrations that you get in the traditional market.
So for everybody that's listening right now, this is just a masterclass, okay? This is a masterclass in economics of what really happens. I truly believe this is the realness and the rawness, and I can hear your passion about what you're saying, because I know that it's true as well. When we're close to retirement, people, some of them have done a great job of planning, but some of them not so much. And they only have, what they have is what they have. And let's say, and listen, $1 million is not what it used to be anymore.
No.
I've saved all my life. I've got $1 million. And they're like, hell, I don't think it's enough. And it's probably not.
Assuming that your costs go down, ha, 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 ha.
Right. And then if you look at this 1% return, you're screwed. Because if you live just a little bit longer, and we're living much longer, that's a long time, and the money will run out. And so everybody's biggest fear is already true. They already know this, hitting the box. And so it's more important now, I think, that we get this message out.
Well, because most people would, so what's their other choice? Go full ostrich, right? Pretend I don't know what I'm going to do, right? It's go in a gyrating market, don't sleep at night, or I'm going to put it in a safe market and, the bank money, or I'm going to be an ostrich. Those are some nice choices we have out there, aren't we? Man. Or there's a fourth option.
And it really is playing in both sandboxes. I think you did such a good job of illustrating that, because it gets you an income stream, but there's back end coming. And, in that 5th or 7th year, that's the real money to keep up, in my opinion. It's the inflation COLA. It's your cost of living adjustment. If people will take that money and reinvest it in their next deal with their original principal, and, let's say they use that money that they were getting as paychecks, that's their spending money, right?
Yeah.
And I think that's the cat's meow.
And furthermore, so let's also talk about that capital appreciation covering the inflation. So let's go back, step in the stock market for a minute.
Okay.
So this is another reason why I was really disheartened, because I've been in the market for over 25 years. So I've seen a few cycles. I saw the dot bomb, then I saw the 2008 crash, and then, there's 2 different technology bombs that we had. And so if you do the math, if somebody put all their savings into technology during the dot bomb, and for you baby boomers who are millennials, that happened in the year 2000, and when everybody put their money into .coms, and it crashed the market. Okay, well, I know that let's say you're 40 years old at that point, and they go and trade your stock broker saying, you're young, you have time to make it up. Let's put it back into the stock market. Okay, I can do it. I'm ready to take some risk. Guess what? You're almost to where you were when the dot bomb happened, but guess what? 2008 hit. What are you going to do?
Back in the same club, right?
Exactly. And then where are we at now? So, right now people are like, the stock market's making this crazy return and that's return, but it's all about your price point. It's all about your entry point, right?
Yeah.
So, if you put your money in on the day that they start measuring on that year, you made a lot of money, but you can still be making up from these losses that you had before.
And it takes a lot more to make up from your losses. It's not the same, I lost 12, so I'm going to make 12. You got to make more than that to catch up.
And it's not 12.
Right, it's not 12. It's like double sometimes, 24, 30.
And then when you include fees, and because you're getting feed to death all during that time. So It's really, and even for the younger folks to say, just go into the stock market because, you've got the time. That's not the point. It's not about it. It's about being smart with your risk.
Mm-hmm. And I love the word risk, because that is the real word, because people are risk adverse a lot of times when they get to this bubble, but their options are so limited that they just don't know what, if they knew about. So let's talk about the financial literacy, because I feel like what you're talking about right now, I'm hoping this is what you teach everybody that is listening, because I feel like there's not a lot of people that understand the basic fundamentals of investing.
That is true. And if that was my passion, because nothing broke my heart more than seeing seeing people come into our offices at 45, 50 years old, or just even worse yet, 2 years before retirement, I got this 401k from my company. What am I going to do? And to say, you probably should have had this conversation about 20 years ago. And these are your options. And so my financial literacy program is for everybody at all demographics, at all ages, but I really want to get people a little bit younger to start thinking about their finances and their money and their choices. One of the big things that I love about the multifamily world is everybody always talks about what's your why? Why were you here? What really matters to you? And what's your dream? Because there's a whole culture of saying, what's your dream and what are the steps to get there? And so let's create your financial plan that fits to your dream, because everybody has a charity, everybody has something that they care about deeply that they want to be able to give to. And then what will it take to get there? Well, a lot of people are sad when they get older because one, they're hardly able to cover their bills, and then they can't give to their favorite charity.
And they can't make a contribution to their heart, to their passion.
Exactly. And they're like, I gave all these years for what?
I'm just trying to stay alive, right? I'm just trying to pay my bills. And that becomes the real sad part of not planning well and understanding all the options available to you.
Yeah, absolutely. And the other thing I found, obviously being a woman in the business as well, one of the things that I found is that women are particularly comfortable talking about finances. That's just one of those things for lots of reasons. And also women are very collaborative. So what I've done is I created a program called Financial Literacy for Her. And so it's a mastermind program that we put together. And so it's a group of women, and I have a powerhouse board. I've got Mandy McAllister. A lot of people know her. She's really big in the mindset. And she's also, she manages, I think it's over 300 doors now. I've got people with lots of credentials, and I've also got the Association for Financial Education. They're behind me. You might probably know Holly Williams. She's one of the sponsors for the Financial Literacy for Her program. She and I are hardcore. In fact, we should do a panel with the three of us one time. It'd be really fun. Yeah, she and I can talk this topic till we're blue in the face. But what we want to do is want people to say, hey, it's not as complicated as people try to make you think it is. It's very clear.
Yeah.
And when we can come together and we can support each other and encourage each other to make these hard choices and to start creating a lifestyle that matches your dreams. And This is such an incredible vehicle to get there, whether you want to be active or passive. Because some people just want to be passive and collect.
Yeah, we all we did was just talk about the passive side.
Yeah.
Because I forgot I cut you off, but the active side, it's just as well, because for those people, there's even more if they want to go that route. And because the world is yours at that point, right?
Yeah, absolutely. But the choice is, it's always to have options, right? For you to be your own boss, for you to be in control of your finance, you to be in control of your destiny. And so when you can't rub two pennies together, it's kind of hard to fulfill your destiny and then not know how to do it. And in fact, the older you are, the more advice that you do need to be able to make up time. And you do need something like this. And you can't turn it around much quicker when you invest in a vehicle like this. And quite honestly, I want to be able to look clients in the eye and say, this is an asset. I have to say, SEC, I'm a CFA, I have to give disclaimer. No, there is no risk-free asset, even though you call the Treasury one. But anyway, on the risk scale, this is one of the lowest risk investments that you can make.
Yeah.
And so I actually feel better about putting grandma into an apartment over the Treasuries any day of the week.
I've witnessed it firsthand. I've got so many people that started, they always give me a little bit of money and they start seeing the paychecks and the consistency, and I tend to get almost all of it eventually. And it's like with this, when the market gets crazy and I have these big swings, that's usually when I get my calls and texts. And
exactly.
They say, it'll be like, Karen, thank you so much that I never have to worry about this crap again. Because no matter what happened today in this crazy cycle, my checks are going to show up because rents always do.
Right, exactly.
Really, at the end of the day, is that vehicle of, and whether it's apartments or it could be self-storage, there's lots of different vehicles out there that provide an income stream that can provide some consistency for the educated investor. And I think that education is needed more now than ever, right?
I agree 100%. And as you might know, women actually own 50% of the investable assets in this country, and that's only going to go up. You know, you have women in transition. And again, so that's why financial literacy for her is like, the time is right. I don't want you to wait for that transition. If there is, I want you to come to some place where you feel safe. You got the girlfriends, sit around and drink some wine and talk about finance. And this is a place where we're going to come together and, you know, let's lift the tide. That's wrong. That's totally wrong. You know what I mean?
A high tide rises all boats.
Thank you. I'll stay in my lane.
You think about this. You can look at college graduates or women go to school and get degrees more than men. It's got to be like 2 to 1 or maybe 3 to 1, I swear to God.
Yeah.
I have a lot of student housing. Very rarely ever boys in my student housing. I mean, it's like a 1 to 3 ratio, I feel like, right?
And especially when you look at the completion rate.
Yeah, absolutely.
They're
right?
closer with the start rate, but the finish rate's a whole nother game.
Women finish always, dude. They are so much better. And yet, they don't have as much. Well, see, I think this is changing. Karen, this is why I believe your message is super resonating, because the world is changing and women are getting more and more into leadership. I have a strong wife that's a woman, yeah, obviously. See, now you got me.
Okay.
I can't talk
You're
now
up
either.
next.
But my wife's very much a strong woman, and that's her gig, even though, and I feel like more women today need and are looking for this financial education because they do run households. I mean, honestly, women do a lot more than men. Can I say that and mean it? I think they do. I really do. Guys, we have it easy. Trust me on this, right?
You go hunt, and we'll take care of the rest.
Yeah, but women are hunting and taking care of it. They're doing it all. I swear to God, I think, and they're just wired differently, and what a great place to go. So how do people get involved in that, Karen?
Okay, yeah, so there's finliteracyforher.com, and there's also, we now have on Wednesdays at 8 p.m. Eastern, we have a mastermind open call for everybody. It's a free call for everybody to come and join. And if you go on the Facebook, Financial Literacy for Her, just as the name says, you can go to Instagram, and it's Fin Literacy for Her, and also on LinkedIn, there's Financial Literacy for Her. And come through me on LinkedIn. And also Financial Literacy for Her, we're getting them at all ends of the spectrum as well, because we also have somebody, her name is Grace Torlai, and she is from Gonzaga University, and she's interning with us. And so she's actually doing some polling, because I want to be able to use a language that reaches that demographic in a way that they'll be heard, because the way we like to learn is not necessarily the way that they like to learn, and whatever it takes to get the message.
Yeah.
But it's
that's
important,
committed.
you know. Yeah, exactly. Because a lot of people read Rich Dad, Poor Dad, and it's an amazing book, but you need some hand-holding along the way.
Yeah.
And some execution. And so that's why we have we have financial coaching, we have financial programming, financial education. We also go out and speak to organizations. So if anybody's interested in us talking to your organization, that's something that we can do. And we eventually will be going out to financial literacy for families as well. But right now we're starting with the women, because it'll be a natural outflow to go into families with the women, because, you know, once the women get it, you know, they're going to have the husbands, the families, you know, and couples and that sort of thing. But, you know, but as you know, women usually are the gateway for most of these things. And once they get the fire, and as you know, a lot of households are still, the men are technically running the books, but they're not running them very well. And that's just because they don't know and they're doing their thing. And so this is something we're educating on a level where you can still take care of the babies, you can take care of what you're doing, your W job or whatever you're doing, but you also can be making really smart decisions early on.
Well, and I think you said it earlier too, Karen, women are way more collaborative. They are way more open to listening. And I mean, women are good talkers anyways, right? That's what women do. They get together and they share, right?
And guess what happens when we talk? We generate ideas.
Guys, we don't do it like that. That's why we have so
many women entrepreneurs.
You put a bunch of men in a room, they're like, hey, how's it going? It's good, right?
Yeah, exactly. You're like, hey, did you try this? You got to check that, because I guarantee.
Caveman talk, right? We can't express anything. But women, listen, I like going to, can I say something really weird? I like going to women's groups because way more ideas are out there. Yeah. Way more ideas.
And that's what I tell my partner a lot. My business partner is, you know, it's like 1 + 1 = 5 with women.
Yeah.
which is actually a really nice bridge into the teamwork with multifamily. And you do have a lot of female teams that are starting to form in the multifamily world.
I
and
see it more than ever.
Anywhere you have passive income.
I'm seeing it more so than ever. I've seen different masterminds that I'm in. Way more women are getting involved. They're not just sitting home. They're striking their claim into the world and saying, here, I matter. I'm going to do this regardless. A lot of times they have husbands too that are just the opposite. Like they're the security blanket, and the women are out there forging that new path, or that of business ownership, of entrepreneurship. And I just think it's amazing. So I bless all that, because I believe that at the end of the day, we all want a lifestyle that matters.
Absolutely.
We want to have time and money. And so many have one and very few have both.
Exactly. And this offers both, and just the peace of mind. And also, like I said, you get to meet a lot of more people. And COVID has actually been very good to me in terms of being able to meet people from around the globe that I wouldn't have before, the whole Zoom world.
Yeah.
And so that's why financial literacy for her is really taking off very quickly, is because in the old days, I would have had to do a Greenville only meetup where I went there physically. And then I had to choose one conference to go to that I could only do one a week and only talk to people that are in a very narrow audience. So now you can have 3-4 interviews in 1 week to spread it out and spread the word.
Really just multiply it, huh?
Yeah, so that's why I've got the Eastlight Investments. That's really the investment arm focused on multifamily. Then
and let's just transition to there. That's a great little transition, and then we'll wrap it up. So in Eastlight, tell me what you guys are doing there and how you're making a difference there.
Yeah, so what we're doing is actually really funny. I'll plug it again that we're doing the scholarship fund through that. If you're interested in become a financial literacy partner, you can go to eastlightinvest.com, and we have a partner page there. So what we're doing is, and it really is related, because it's about going into the community and wanting to make a difference, because, we didn't spend a lot of time talking about demographics. But demographics are so important right now. The apartment buildings they really need a place to live. You have more people than you have places for them to go. Yeah. And then also with the COVID and people having lost jobs and that type of thing, is their ability to move into a single family home has moved down. So that's one of the areas I really like to focus on, the value add, more, C+, B- area. We're looking here in Greenville. Yep. And also, I've been also looking into Eastern Georgia as well, and in Chattanooga, Knoxville, that area, because those areas are really starting to grow. Yep. And people are moving in. I'm in South Carolina. We're a very tax-friendly state, so the COVID has been very good to South Carolina. Right. We had a lot of people from blue states move here, and so we're growing like crazy. In fact, I just had lunch with my son earlier today, and he goes to Clemson. Go Tigers! And I just had lunch with him today, and he's like, "Mom, I haven't been here since Christmas, and 2 neighborhoods have gone up." And look, another apartment building. But, and I told him, I said, he doesn't really need to fret right now, because it's growing. The people are coming here. Vacancies are not an issue here, because it's continuing to grow. The jobs are growing. You've got so many manufacturing companies here in Greenville, as you know. And then you have all their feeder companies, and we're inviting more companies here. And so then they pay really well. These factory jobs.
And these are big jobs. These are big factory jobs.
Light industrial is where it's at. And in fact, that's one of the areas that I look even globally, especially when I'm looking on the passive side of my portfolio, is light industrial is really, that's not going to go away. You can't robot that away. You need higher skilled people.
What I love about that area too, that marketplace you're talking about, where you're targeting too, there's, north pressure and south pressure. People that are north are moving south, and people that are south are moving north, and really
Florida north,
Florida north, right? They are, and the Carolinas itself, Atlanta or Georgia, North Georgia, all those markets right there. Yeah, I'm looking in
northern Georgia as well. Yeah,
they have a great unique aspect of what's going on, because people are really trying to get away from the craziness of Northeast, right? And all that restrictiveness, and they go to like South Carolina, North Georgia, and it's like a breath of fresh air.
And it offers all the things that the big
jobs
cities.
There. There's real jobs.
And there's Southern culture. No, but there's actually regular culture as well here in Greenville. I mean, I lived in Boston for 17 years.
Yeah.
And they have all the shows. And I know, like, right in COVID time, they don't have much of that. But in terms of this being a place that there's something to offer, I mean, downtown Greenville, I mean, come on, it doesn't get much more beautiful.
I always say, what I relate Greenville to is, like, it feels small town that caters to a corporate client.
Bingo. That's well stated.
Yeah, it is.
Well
Has
stated.
a small time feel of like this is just an average cool little town, but it absolutely caters to high income, wealthy people that have great jobs, that run big businesses, and they've just chose to call it home. Right?
Yes. Exactly.
And it really is very unique. I love that area. In fact, that I told you before we started, that was my first deal, was in Greenville, actually Malden, which is right next to Greenville.
I lived in Malden at one point, yeah.
And,
I know Malden
it was
well.
an old apartment complex built in the 70s where I made my first multi-million-dollar profit. So it is very special to me, and I think that's a blessed area. So that is and that's the right strategy. So eastlightinvest.com. That's where you guys are doing. You're out there growing and finding apartment deals in those areas and creating communities. Am I right?
Yep, we're creating communities, and in terms of offering something for both passive as well as active investors, we touch on a little bit about working with a team, but I'm always looking to work with other like-minded people on the active management side as well. That's one of the things I love is some people will get a single team that they'll work with. They'll have 3, 4, 5 people they always work with. Some people like to diversify through who they manage with as well. And this is where my ADD kind of comes in, where it's really nice where I can get involved with different management teams. It's nice to meet different people and bring different skill sets in.
I want to say I second that hard. I believe do deals, don't do partnerships.
Right, exactly.
Right? Like just because you can do a deal with somebody, and you always can come together and figure out, like, let's do this, and here's what we're all committed to do, and that's great. But the next deal, you may be like, I really only, or something new comes up that you can really bring value to, and you don't want to have to bring all the other luggage, we'll call it, for lack of a better term, with you on the next deal. You just want to I just want to go by myself because I can add value for this one thing and bring it, and I don't need all the other pieces to it because they already have the other pieces.
Yeah, like for example, I just met somebody at the MFIN Summit a couple weeks ago, and he lives up in Jersey, and he plans on moving down here in the next 3 years, and he's not looking to do a partner, a long-term partnership with me or anything, but he needs boots on the ground for the next 3 years.
Yeah.
Perfect. It's a win-win for both of us.
There it is. That's how you play the game. So listen, wrapping it up, a couple of things. I've asked a couple questions at the very end. Any books that you're reading right now that you want to share that are making a difference for you?
Well, I have to say it's
favorite book.
Well, a favorite book, I don't know, but an excellent compliment to everything that I said today is Holly Williams' book, Hidden Investments. It's a really, really good book.
Awesome. And then advice for new people starting in multifamily, what advice would you give them?
What advice would I give them? I would get involved in a coaching program. However, one thing that I would do is sample the goods. I really, because all of them teach pretty much the basics and they all have a special flair. And there are lots of good ones. I'm not here to disparage anybody, but there's different personalities for different types and different skill sets. And like for me, I've been involved in 2 different coaching programs. And one of the earliest programs I got into it actually wasn't a coaching program, it was more a mentorship program, but it was Dan's premium group. And the reason I did that is because I knew with my background, investor relations was a no-brainer. So I chose his program because I don't think there's anybody better in the business than Dan Hanford in the investor relations department.
Yeah.
And so
he's speaking at my event coming up, and that's what he's talking about.
Yeah, he's the best in the business. So for that piece of it, I want to surround myself by the best. And that's one of the things with some of the coaching programs, they can get pretty spendy. So it depends on how many you can buy. But definitely go to a few boot camps, because also what's important is, we're a pretty small universe, as you know. Yeah. And I've seen you speak at several conferences, so I know you well. Yes, you're one of my favorites. I always go to your sessions, Corey. And you get to know who the players are and who names. You learn what their biases are, what their strengths are, what their weaknesses, and there's something to learn from everybody. So if you can't go to the boot camps, go to a few conferences and really educate yourself and just get to know the lingo and get to know people. Which is a cleaner way to say that is network. And these are good places to start networking.
Yes, it is. Right on. Thank you so much for your time. And last thing, if people want to get a hold of you, where do they find you?
Yes, the best way to get a hold of me is at Karen@eastlightinvest.com, or my website, www.eastlightinvest.com, or feel free to reach out to me on the phone. It's 864-551-1820.
Rock and roll. Thank you so much. Listen, guys, I want to thank you for coming on this journey with us. Karen has just hit the shotgun today and fired both barrels. Great information, great knowledge, and really a certified financial advisor. Wait, that's not right.
Analyst. Yeah.
Analyst. Highest designation you can get in that world. You don't just get that. That's a passion to get that, right? That is something that you strive because you believe in what you're doing. And to listen to her story of money and how it works, guys, it is really important for you to act on great information. Get out there, network, do things. I'll pitch my event because it's coming up. A2M Live, Apartments to Millions Summit Live. You can get your ticket at a2mlive.com. Highly recommend that you do it. Great speakers, great content, but it all starts with belief. And if you believe it, you can achieve it, and your paradise is possible.